Welcome back everyone. This was the chart that we have seen in the previous episode, right? So I already told you that we are selling up there. That's the retest. Yes, because we broke the downside riser that we are in a sell program and we need to hit that ticket to down there. So that right there is a retest. Okay, that's a sell and stop loss right there. And that's a potential profit reward right there. Okay, and I told you that to never trade these kinds of black books. As you can see, huge stop loss not good. Instead of these kinds of stop loss, they are different. Okay, it is risky, so you never uh, touch that thing. Okay, pass it. Then I told you to, we sold this one and our stop loss was hit. And we bought this one for this black box down there stop loss, and again stop loss was hit. So we lost these trades and we won this one. Okay, we won this one, this run as a huge dump. So these losses are back and we are in profit potentially. So that's what we have seen previous one. So today we will be looking at this and some other charts too. Okay, so do you see any black box here? As you can see, we are in downtrend. Then a black box formed there where exactly the 1, 1, 2 and 3. Okay, so as you can see, buying that and putting stops down there, that is risky, right? It is risky. Why? This week is not good. This week is not good at all. It is not good at all. So if this week was not here, then I would have sold that thing. Bought that thing and then sold it using the third model. But look at that. This week it is not great. So I would have to put my stop loss down there and enter up there. So that is going to be some risk right here. Okay, some risk. So it is a little bit of craziness here. And the other thing is look at that. Look at that. This is the bodies. They are not overlapped at all. It started halfway of this red candle and it opened down there, traded halfway and closed halfway of the previous candle, right? So these kinds of structures, these kinds of shapes, they do not yield too much. Okay, some kind of, like this one. This one is great, as you can see, overlapped fully, and it opened. It opened exactly where it closed. Look, that's where it closed. It opened there, expanded up, closed. Then the third one opened there, expanded down. That is beautiful. That's a beautiful black box. This one. But that one has broken some rules. It broke some rules. So it opened down there instead of opening up there and expanding up. So this week would not have been here if it traded up there. Okay, this week would have been up there, right? So anyways, these kinds of things you have to pass. First thing, the risk is too much. The risk is huge. This is a zoomed out chart. And next thing, they are not similar in shape. The shapes, they did overlap, but they didn't open where it closed. Okay, as we would have preferred if there was the second candle here that overlapped there and pushed back up, supporting this one. Okay, then we would consider this one, not this one. Okay, so it's a general idea, okay, general thing to pass these kinds of setups. Okay, pass. Then this one happened as TP2 nailed down there. It approached TP3 but never hit it. So, and then if you want to enter this one down there, you have to put your stop loss up there. So that's a pretty much huge stop loss. So what I'm gonna do is I'm gonna wait for another black box. So targeting this TP to this black box TP2 and the lowest black box TP2. Okay, right. So after this price has broken the downside, look, it retested. Since it didn't hit TP2, that's a sell. Look how beautiful it is. Look, look. We got this one and this one. Beautifully overlapping. This one. Did it break? No. What about the fourth model? It did. How? It opened it. It traded down first, showing us the direction, the signal, showing us to sell. Okay. Then it pumped up. What does that mean? It means I am selling up there, bro. Stop loss up there. That's my risk. That's my profit. TP2 right there. That's at 1 to 6 or 7. 1 to 6 or 7. That's beautiful. So I have entered 2 orders, I mean 2 sales. Okay. This one break, sell, stop loss up there, and that at the retest. I already know we are moving down. Down there it showed its hand. That's a beautiful trade. And then if you want to preserve your money, you can trade to break even. Once it hit TP2, once the price hits TP2, you can trade your stop to break even. But that one, the stop at retest, you can put it at halfway. And then once it advances, put it at halfway. Okay, following the price. Following the price. That's exactly what happened here. And then what happened here? We cannot take this as a black box. The same theory as this one. Look, when you zoom in, it opened down there and expanded up, and it didn't hit 78.6% is up there. This is 61 point something. This is halfway of this body. Why is the body? So it didn't hit, so we are not taking that thing at all. Then next, as you can see, I measured this one with this one. Yes, this one right there in TP2. Happen to be up there. Why? Look closely. Look closely. This candle is bigger, wider in body, right? This body, look at that. It covers those wicks, the previous candle's wicks, which shows it is different from the other. So the next candle opened and traded up, even surpassing the 100% mark. It is high, taking the high. Finally, the third candle, the breaking candle, what did it do? It traded at least at 78.1% and collapsed to the downside, right? Collapsed to the downside, right? That's beautiful. So we're gonna consider this one because they are different. They are different than this. This is X. This is full bodied. This is full bodied. This is a wicked. They are dodges, some kind of dodge. Okay, so using that, since the market broke the upside, I am gonna target this one TP2, and I'm gonna wait for the market to trade down. Why? It already showed me we are moving up. That's why I'm projecting this to the upside. So every attempt to move down, that's a buy. Stop loss down there. Again, every attempt to move down is another buy. Don't buy more than 2 times of it. That's enough. 2 times, that's enough. The market won't give you more than 2 times anyways, but because as a double bottom, it will count as a double bottom, and that double bottom is a strong indication that we are reversing. We are gonna reverse. Stop loss the same thing down there. Buy 1, buy 2. 2 orders upside. Where is our target? Where is our target? Is up there. Target up there. Okay. So you are in a buy position here, bam, and then we got another one here too. Did it break? Yes. Did it break? Yes. What you gonna do now? I'm gonna sell only up there. I will never sell down there. And stop loss up there not gonna happen. Because it showed us we are moving down, right? So we have 2 buys to the upside and we have 1 sell exactly right there. But the market surpassed our stop, hit our stop loss, not a lot of money. Bam, it went straight to the TP, but it never hit it. So you are in a lot of profit right here. Then you already know once this candle has passed, you know this is gonna be the upside. Okay. Every market that comes down is a support. It's just a support. Okay. It's just a support. So based on this black box, you're gonna buy another right here. Buy because TP2 is up there. It's up there for both of them. This is a buy and this is the next buy. I'm not gonna buy this one anymore. You can buy the third time by minimizing your stop, your lot size, but that's enough. The reason I'm buying here is because it might keep moving without coming back. So price there, I found a good price, a cheaper price, so I bought the shit too. As you can see, support, another support. That how I am assuming that it will go to this TP1. If we can see the chart, 22 July 12, right? Okay, 22 July 12, 19 July 22, price I'm looking at down there. 22 July 12. Okay, I'm done with this. 12 o'clock. Which one is it? Oh, okay. 22 July 12. 22 July 12 means it's around here, I think. I think it's around here, right? This one. 22 July 18. That was when? That was 12. So 12 means it is around 6. It's around there. Yeah, this is a low, I think. This is the one that we bought, and this is a low. So look what it did. It delivered. It went to upside, right? It went to upside. So I told you to trail your stops. Trail your stops. Even if it hits or if it doesn't, you don't care. You are in profit. You don't want to give that up. You don't want to give that up. It's better to get out early than to lose money. To get out with a small money than to lose your money. Okay. So this is exactly it. So this was the pump. So this was the support area, and then, yeah. Let us see. This one has a gap price, this volume, volume imbalance or whatever. This one. So let's go and see if there is a it is this one. Yeah. We have this imbalance right there, that gap right there. Okay, the wicks are overlapped. It did went up, so our buy is successful. So as you can see, but I think it was not it because this is the highest high, right? So it made equal highs and dumped, right? That's what they did. That's what the market did. So we never hit TP2 So that's why we are trading our stop halfway. Once it advances halfway, and then it will collapse and get out of the trade. Beautiful. Right, it's beautiful. And then now let's come back here and let's see if we find any black box. Yes, where is there up? Say 1, 2, 3. Did we break? No. We tried, but it didn't. So that is gone now. Then what about now? Yes, 1, 2, 3. Did it break? No. So I said, did it break? Yes. What is that? I said, okay. What are you targeting? TP3. Down there, TP3. Why? TP2 is my entry area, not my partial taking area. So as I said, and then we found another black box. Where? 1, 2, 3. Did we break? Nothing. I mean anything? No, we didn't. 1, 2, 3. Another black box. Did we break? I'm sorry, this one. 1, 2, 3. Did we break? Yes. Did we break? Yes, we did. Is this a sale? Yes, it is a sale, but look at the risk. The risk is ridiculous. We are already in a sale with this one, right? With this one. So, it's better to let that run because it's weak. If the weak was not there, it would have been good, but the weak is there, unfortunately. So, that's risky. That one is risky. Look at that. That's risk. That's our risk. This one is this one. As you can see, there is a difference between them. There is a difference between them. So this one says last candles. Yeah, I'm considering the last candle. So look at that. How I measure this one. I measure this one. Actually, this should have been based on this and based on this one. Okay, and halfway. So TP2 is TP1, TP2 is down there. Of course, TP2 is down there, so we want the price to come down there to gravitate down. Okay, it is not a must, but it should come down there. It's a high probability. That's exactly what happened. So that's the same. And then what happened? We found another black box here. 1, 2, 3. Did we break anything? No. Bam. No. So stop loss up there and down there selling. Not good. It's not a good idea. It's not a good idea. These wicks are just damaging. So these wicks are not good for entry. Okay, they are not good for entry. So finally we found another black box here. So it opened down there, just like I told you earlier. It should dump down. So it really did dump down. Went down. So this is not a buy. This cannot be a buy. Look at that. Look at that. Look, it opened down there and traded up. Okay. Alright, we can buy that one. It is the previous example that I showed. It is this one. Okay. It is this one. So it really did went down and hit our TP2. Just like I told you. It's really amazing. So you can buy that one up there with our stop loss. Is there a wick? Yes, there is a wick. But here the wick is so small, I don't know why. So that's it why. Yeah, so if it is like this, I might enter the trade. I'm already in a sell position up there. So look at that. That is crazy, bro. That's crazy. That is crazy. So anyways, that's a sell might be, and our stop loss would be it. Stop loss down there. It's triggered. I'm not gonna enter a sell. Why? Because I need to see some retest before I enter a sell. But unfortunately, it didn't. If this retest was attempted, or this retest was after it broke, and then bam, this week, then I would have entered on that week. I would have put my stop loss up there. Look, the risk would be not too much. But if that is not the case, then I will not enter at that rate. Okay, simple as that. Okay? Simple. That's the whole thing, guys. That's the whole business. Okay. That's the same thing with our drawing. Let's go to this one. Yeah, that's the same thing. It is zoomed in. Okay, it's the one that I showed you now. It is zoomed in, so it is a sale. It's everything is a sale here. It is a sale. What it says here, buy, is not buy. Okay, I said X. Okay, I already placed an X up here, so that's not a buy. That's not a buy because 0.5% is not broken up there. So we are selling with this one. Okay, not buy. So that's everything. That's everything. So this is another chart. So I'll show you this one because my battery is running out. So okay, I'll see you in the next one. Okay.